What about investing in China? What's your strategy at the moment? We're seeing, a lot of weakness in Hong Kong overnight, and the COVID story seems to be getting worse. How are you thinking about investing there?
Well, again, I think the short-term picture is challenging, right? And I think in all likelihood, we're unlikely to see an obvious and speedy economic recovery until likely 3Q at the earliest. And I think the zero COVID strategy will continue to weigh on PMIs and economic activity locally. Now, in terms of the longer term opportunity in China, we still think this is going to be one of the fastest growing economies globally. It is still an incredibly large consumer base. And if we're selective in terms of how we're positioning ourselves in that market, actually the entry point today where China is trading less than 10 times forward price earnings looks as attractive as we've seen in almost a decade. Now, just to be very clear in terms of where we see those opportunities, we think companies aligned to those longer term economic ambitions of China, so uplifting technological capabilities in areas like software and hardware, thinking about some of the clean tech solutions, and then also actually China's own biotech space as they try to build out their own capabilities, could be very attractive long-term growth potential. But we have to just be thoughtful around that entry point. We have to be thoughtful around the quality of the businesses we're investing in, because again, the short term could be challenging, but if we can take that risk, the long-term opportunity is very significant.
Luke, how are your clients feeling about China? What is sort of investor sentiment toward the region right now? Because clearly there's a lot of debate about whether it was investable at all for quite some time.
For sure. Look, I think there's a very bifurcated view across our client base. I think the vast majority still see the long-term potential in China, and within that recognize the growing relevance of China within their portfolios. And just to be very specific, if you think about the inclusion of domestic A-share stocks into global benchmarks that has happened to a degree over the last 3 or 4 years, that continuation over the next 5 to 10 years should mean China becomes the second largest capital market in the world. And so with that, the vast majority of clients need to build a dedicated standalone China exposure to recognize the importance of that asset class within their overall portfolio. Now, beyond that, what's also happening is the complexity of China increases as people are also thinking about investing in emerging markets outside of China. And so that EMX China trade, where actually the correlation between a lot of those emerging market countries outside of China has reduced relative to what's happening in China over the last couple of years, also gives an incremental opportunity if people are thinking about where can growth come from over the next 5 to 10 years.